Good morning, good afternoon, good evening, depending where you are on the planet, and welcome to the Tuesday, the 18th of October, Bull versus Bear webinar. Steve Miley on the call for trade day. Welcome, everyone. We're going to go for our usual regular run through in here today. Calendar, both the macro calendar and the micro calendar. So the earnings calendar, we'll take a look at those. First of all, we'll run through some articles from the major news wires. We'll also take a look at the charts to see what's going on, where the trigger points are potentially coming today, from my perspective anyway. German ZEW this morning. It's an economic sentiment survey. This is the main part here, and you can see beating expectations. Expectation for minus 65.7 came in at 59.2. Have an article here. German investor morale less pessimistic than they expected from the ZEW survey. It's an important survey for Europe, by the way, for you guys in the US. So certainly a definite positive from that this morning. Looking ahead to the balance of the day, it's fairly light. We said yesterday, we went through the whole calendar for the week, right? It's super light on US data this week. Industrial production this afternoon, 9:15 US Eastern time. But I mean, not really usually a big mover. API weekly crude oil stock. Now there is talk of a release of oil crude, US oil crude stock this week, potentially over the next week or so in here to keep the oil price down. So that'll be just interesting as well, just to keep an eye on that as well later today if you're trading oil. But a fairly light calendar. On the earnings side, far more important. So now yesterday, so in here, Wall Street rallies after BOA results. We looked at that yesterday, and also then that UK U-turn. So that was yesterday, and a strong follow through this morning. Johnson & Johnson beat, notable beat in here on both revenue and earnings per share. That was one of the main focus, alongside Goldman Sachs. So another financial. Remember, we looked back to last week. Most of the financials beat last week as well. So it's been a good start to earnings season. Even the big mega cap corporates as well, outside of the financials. So Johnson & Johnson starting to report and starting to come in positive. A big one is going to be later today and then tomorrow. Tesla tomorrow, but big one this evening. You see in here on the investing.com earnings calendar in here. If you haven't got that calendar, I'll share it with you. Remember to do the filter with the 3 stars. Only look at the big boys in here, unless you're trading the individual stocks. But I mean, we're obviously, most of us in here, we're looking at trading the indices. So we want to see the bigger stocks that are going to impact. Even though, Netflix is still a $109 billion company, but I mean, not particularly huge company, but still big. But why is it so important? Because it's seen as a bellwether, a barometer of the US and the global consumer. Okay, so are they being slowed down? Are we moving it towards a recession because of the significant shift that we've had, obviously, in interest rates and the high inflation rates? So Netflix is going to be super important, but that comes after the bell this evening. So we're watching that. But as I said, Wall Street rallies after Bank of America results yesterday. Let's have a look at 5 things to start your day out of Bloomberg. So Biden administration is moving toward the release of another 10 to 15 million barrels of oil. I just touched on that just now, to keep the oil price down, to keep the gas prices lower in the US. UK gilts whipsawed, initially climbing after financial. The Bank of England delaying the start of its gilt sale program. The Bank of England have said that they're not doing that. Okay, but overall, we're still seeing that lower yield move in here overall. But we did get a spike higher in yields this morning on the back of that. Iron Bank's Credit Suisse selling its US management arm in here. We spoke about Bank of America already. Gains fading. Well, not really. We're up. We had a follow through this morning at 1.1%, nearly as high. Well, 1.4% here, nearly as high at 2%. It's 1 point on the Nasdaq. So a really strong follow through after a really strong day yesterday. I was calling for that continuation on Friday. We also got a big correction on Friday, but a really strong session yesterday, a strong close, and a strong continuation higher with the futures overnight. So markets in here certainly looking far, far more aggressively positive. at the moment on the indices side. We've spoken about that already. US stocks set to extend gains. Pound of gilt drops, but they've kind of recouped some of that in here. Bank of America strategy see bottom for stocks in the first half of 2023. Okay, we are getting some positive soundings now. Stock volatility prompts JP Morgan managers to shift tone. Diverging view to highlight uncertainty facing equities. Wall Street bulls are trimming their predictions for the S&P 500. So we're getting kind of mixed signals, often mixed signals from the banks in here because of as we go towards a turning point. Even as US inflation climbs, Wall Street sees steep falls coming. Projections put inflation nearing Fed's goal entering 2024. So we're going back to also they do believe that the rising rates are going to have the impact in here, and we will see the inflation back under control by the beginning of 2024. Okay, well over a year away, but given the heights we went to, that's kind of a positive out on the horizon. Futures up. Johnson & Johnson results. We've already spoken about that. Earnings optimism. European shares rise on UK U-turn, and Wall Street set to open higher as well. So we've had that follow through plus that ZEW survey. Wall Street rally throws spotlight on reports. So we've got Tesla and Netflix. We've already mentioned that today. Investors survey signals start of policy capitulation. So this is an interesting year. We've been speaking about this. The Bank of America Fund Manager Survey they inherited from Merrill Lynch when they bought Merrill Lynch. So this has been going many years in here. Very well respected survey, but investors rate cash levels even further in October. Sentiment towards the economic outlook remain close to max bearishness. The fund manager survey is telling us that screams macro capitulation, investor capitulation, start of policy capitulation. So we are seeing policy capitulation. What we saw. I said this when the when the Bank of England got intervened after the UK debacle that we had 2 weeks ago after the mini budget. All of that is showing capitulation by even the institutions, policy capitulation there, right? And so for me, this is telling us that we're getting close to the bottom. If not, I think the bottom went in on Thursday. I really do that. I said that on Friday. I really do think the bottom was established back on Thursday after that CPI, a massive turnaround, a multi, not a once in a lifetime, but you don't get turnarounds like that. We said, what was it? The largest rebound for the S&P, the fourth largest rebound from a low to a high for the S&P. The fourth largest one, I think, fifth largest one in its entirety. We're going back over 100 years, the S&P, right? So, yeah, I mean, a significant turnaround recovery in here. Are we seeing max bearishness? Are we going through peak bearishness in here at the moment? Britain's political. I mean, I'm not going to go into that, but I'll share this one. And if you want a little explainer in here, for you guys in the US, don't know what's going on. Obviously, we see it front and center. So, but it can give you a little bit of an explainer there from Reuters. I put that into the chat. Where are we going into this morning? Well, good follow through in here. For the European exchanges, we're up between 2/3 and 1.5% in here. Look, the DAX, the German index on that ZEW survey, up nearly 1.5%. The FTSE, the UK index, up 1%. The CAC, the French index, up over 0.8 in here. So all looking positive. And if we look at the US this morning, having a really strong recovery rally yesterday, we're up another between 1.5% and 2%. The Nasdaq nearly up 2% this morning on the futures side. And on the Fed tool in here, nothing really changing in here. November, we're nailed on for the 75 basis point, and December now, a very high chance of another 75 basis point. Not much moving on the Fed tool at the moment. Right, let's run through some of the charts. So, I was bullish going into yesterday. That was proved to be right. We've got this tentative trend line in here. The market flirted with it back on when we fell back lower on Friday, and then we got above it yesterday. And then look at that really bullish continue. We actually gapped while the market was closed for the hour. It's closed in here. The market gapped higher in here, and then really strong follow through in here. Not far off the highs, above Friday's high in here. This is the S&P 500, by the way. And if we look at the 15-minute chart in here now, we've had a slight grind back. I think this is high-level consolidation. It's held above this swing low in here. We have had a series on the 15-minute chart of little lower lows and lower highs, but now you're reversing that. If you look at the trend line that comes down through the high in here, we've already reversed that. The longer this trend line in here is more than intact. Okay, the one this is coming up from the low. We've already reversed that. The longer this trend line in here is more than intact. Okay, the one this is coming up from the low. The one this is coming up from the low. from back on Friday's low that is there. So, all of this very much intact for me on the upside. There's no real trigger, but below the overnight low, it looks more negative. But, you can pull the trigger on either this peak here, this peak here, this peak here, this peak here on the upside for me as a day trade. These all it looks just bullish. I mean, I can't get away from it just not being bullish. I'd just be long now, to be quite honest. And then a similar story on the daily in here for the NASDAQ. Again, a little gap higher, took out Friday's high, pushing higher. We're right up on the highs. And then go to the 15-minute chart. Again, look, extending this trend line that we drew yesterday out. That's way intact. We swung already from above this swing low, higher highs, higher lows, swinging higher again. A little bit tentative at the moment, but you've got nothing to stop this now, right? Today's, no data. You've got sentiment is bullish. There's a bigger picture bearishness out there. Earnings season coming in fairly positive. You've got Tesla after the bell. During the day session, industrial production, small piece of data. You've got the API oil data. Probably not going to impact too massively in here. So most of this is like, for me, it's just continuation. Trend your friend, right? I can only play this and look at this from the long side. We are getting a dislocation between the commodities, though. So, gold and oil has been, there's been a positive correlation, but you see this kind of really with stocks, through here on the way down, and even on that rebound that we saw through the early parts of October. But of the last week or so, it's been a real dislocation. So gold continues to look heavy in here. We had a rebound failure yesterday, even though we're nudged higher in here. I wanted to play it from the short side yesterday. We drew this yesterday. The market broke back down yesterday, and then it's tried to rebound and failed again today. So gold in here, I'm still happy to play that on the short side. And if we go into here, I think you can either trade the November or December contract in here on oil. I've still got it on the November contract. Let me just have a quick look in here. I think that should be moving across to these. So look on the December contract as well in here. I'm going to put that up as well. Let me just see what how we are on the data if we zoom right in on like a 1 minute chart. So the data's still fairly good in here, even on the so you can probably get away with trading either in here at the moment. Your preference really, but let's take a look at the deck. I think deck's pretty much more front month. But yeah, I mean, if we go look at the daily first of all on oil. Again, this failure we had, we've had now this dislocation from the beginning of the year, from September, from the beginning of the year, you've had, not the beginning of the year, from September, in August, you've really had a correlation, and the oil down, gold, and stocks down, the rebound in here coming around the same point. But we've had this decent rebound in here for the last few sessions on stocks, and oil still stays negative. And, I'm looking at this still as a very negative setup. Go into a 15-minute chart. In here, this still looks like, although we've been choppy and sideways so far this week, prefer to play this on the short side. And you can see, obviously, going back to last week, you're in like more of a downtrend. So certainly for me, this is still playing from the short side. The release of that oil in here, if we get any further information on that, obviously increased supply, lower price. So this just looks to me negative. I mean, it is a bit sideways the last few sessions, but overall, go take a look at the daily. You're kind of sideways the last couple of sessions, but for me, it's still playing it from the short side. And here on oil, a break of the lows, going with a break of the lows. So here on the deck contract, you've got the low 83.60 on the November. We are down at 84.56. So through those lows would just be a trigger into another short for me on oil. Not much more to add to that, really, guys. Tesla after the bell, industrial production, API data to watch out for today. Stocks for me stay bullish. Nasdaq, S&P, whatever you want to trade, and gold and oil remain on the negative side for me. All right. I'm going to wrap it up there. Going to wish you all a great trading day. I'll be back with you tomorrow with another bull versus bear webinar. Until then, take care and stay safe.